Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 3rd of September. All right, it's just the coming into the big day where the non-farm payrolls are due. Sets up the basically the timing for the Fed's tapering of asset purchases. So what we've seen in the last sort of 24 hours, just a little bit of a dollar squeeze to the downside. Right, there's the data. If I just scroll up a touch here, the jobless claims came in a little bit better, the weekly number, but you know, I think the market's just very nervous, and it's pretty evenly balanced between are they going to taper or not? And it really comes obviously down to the non-farm payrolls data. If it's really strong data, right, then we are going to see some sort of announcement, some sort of move by the Fed. Now, just looking at the bonds, I can tell you plenty. Price is a little bit higher, which means the yields are a little bit lower, right? So once again, we've just seen a bit of a toing and froing all week around the bond yields, up and down, and that's sort of pretty much stalled the US equity market. And the currencies, well, it's been a bit of a risk-on profile. And by that, I mean US dollar lower. And you have a look across the board here, across the pairs. They are sort of the dollar block, euro, sterling, Aussie, Kiwi, all moving to the top side. We've got really gorgeous support trend lines to use there if the US numbers did come out strong. Now, euro probably went a little bit further. There's, you know, a bit of rumblings that inflation in the Eurozone is picking up. So that's adding a little bit of a tiny fraction of support. It goes with the current sort of weakness in the dollar. So that's why it's a little bit exaggerated. Sterling's tweaked up to that second resistance line. But today it's all to play for, right? We've got, and I've been saying this, dollar yen and dollar Swiss are out of the game at the moment. I mean, they may kick into gear with the non-farms, but they're not really reacting like the way you want to. If anything, a bit of a clean out to the downside here in dollar CAD goes with that move in oil, right? So it looks like oil is sort of dominating the move there. Well, a bit of dollar weakness, strong oil leads to a lower dollar CAD. Everyone's happy there. So it's sort of broken down. Now, where these currencies are, it's going to be obviously important for what happens. Now, I like the whole setup, right? If you go back a week or so ago, let me just actually do this on euro. If I just scroll back, you know, we had that dollar strength, okay, stalls, and now coming back to really squeezing the market back to where it originally was. Now, this is pretty typical of what happens when it comes up into a data release that is sort of right on the well, I was going to say seesaw, but could swing either way, right? Strong numbers, we should see the dollar rally. Weaker numbers, if it misses the mark, well, then the move is already sort of on. These things should sort of pop to the top side. So this is just a bit of rebalancing of portfolios, I would think, of the currency values ahead of the non-farms, because it is such a critical release. Now, just on that, if I just come over to the news pages, you want to focus on a couple of key components here. Now, dollar, this is the sort of headlines, but what you can find in some of these stories, especially on Metastock, is details, right? So if you go in here, you'll see a bit of mumbo jumbo. They'll try and give you some sort of explanation as to what's going on. What I'm really looking for is on this part here. Friday, the US government report on payrolls. Okay, non-farms expected to rise by 750,000, with the unemployment rate anticipated to dip to 5.2%, right? So you need to have those numbers very closely on your radar. So that's here. So don't worry about the prime number, right? 943, that's fine. 750 is the mark we're looking for, okay? And down here, 5.2%. Right, they're the benchmark levels. Now, the thing is, so what we're looking for is you want a really good number to really get it pushing. But say above 850 or definitely above 900, the dollar should really scream to the top side. At the same time, ideally, you're looking for the unemployment rate to hit that mark. If it hits 5.2%, that's good. That won't change the momentum that occurs from the non-farm payrolls. right? But situation is, this is why it's a tricky event. Say we get the 900 here, right? You get 900 and the rate comes in at 5.3 or even 5.4. That's going to take a bit of the momentum off that dollar rally, right? So I think the big number to look for is just the 750. I mean, the unemployment rate, yeah, it's one of those things, but that can be influenced by participation rates and those sorts of things. So really the key number here is the non-farms themselves, and we'll see how that pans out as we go through the day. Now, just to reiterate, I mean, I say this all the time about non-farm payrolls. As you can see here with the actual data release, there's a whole bunch of numbers, right? And there's potential for disruption if they don't all line up. And what I mean by that is if they aren't all strong, if they aren't all weak, then you're going to get some crazy moves. So looking at this now, the key numbers to look for: non-farm payrolls itself. Sorry, bit of a mouthful there. Unemployment rate, and then the last sort of year or two, less so recently, they have been focusing on their average earnings. Right. I don't think the average earnings are going to come into it just at the moment, just the rate and primarily the non-farm payrolls. So when you are planning your trading opportunities with so many variables coming out, right, despite what you may hear out there, the liquidity will be drained out of the market, right? What you might see is a couple of rates there, say within 5 or 10 points, but there'll be no volume behind them, right? It's like a false front. You think there's liquidity, as soon as the numbers come out, one hit and it's gone, right? So don't just be aware it is a dangerous situation. So with that, reduce your trade size. And one of the other key things is have a look at the price action leading up to the actual release, right? If there's a significant bias, say to the top side in euro, well, just be aware that you could get a really big shoot on the number. It really depends on what's happening. Ideally, I mean, I'm focusing on strong numbers. Now, if I was looking at euro, I've got a potential entry level back down through that trend line there, and definitely through the main support trend line on euro. Sterling, I'll probably leave it out, to be honest. I'm not a big fan of sterling with all of it. It's just got its own little thing going on, but it is correlating very well with euro. Aussie and Kiwi are prime. They got some great support levels here. If we get strong numbers, you'd be looking to really get into those two pairs, and that's where I think the action is. I'm not that interested in the dollar CAD. All this crazy price action and the fact that oil impacts so much probably dilutes the impact there on dollar CAD. So really, to me, if you're looking for like a tip on which pairs to look for, definitely euro. You can throw sterling into that bundle, Aussie and the Kiwi, right? Otherwise known as the dollar block. These pairs, and why that is, they've got nice trending, short-term trending markets. We've got trend lines on the downside. In actual fact, one of the key things too, don't think that Aussie and Kiwi don't have trend lines on the top side. If I just scroll that data down, they do, but the Aussie's got a good almost 100 points to move before, or 75 points before it hits resistance. So it could easily, even with a slightly weaker number, the Aussie could be a nice move to the top side. But you know what we're looking for is the big move. And to me, for trading over the next month or even for the remainder of the year, strong non-farm payrolls delivers us lots of opportunities to get into the dollar trade. And that's why I'm sort of focusing on it. And we do have those gorgeous trend lines to sort of take advantage of. So that's where we are, guys. It's we've been waiting all week for this, right? So now it's here. It's time to get busy. Once the number comes out as well, right? Depending on what the number is, always keep an eye on the US bonds. Now, if the yields start moving up or down, that will really determine what happens from here. So if we get really strong, the forecast is 750, right? Say we get 900, right? You'd expect the price to be falling, right? And the yields to be rallying, and that will send the equities lower. And we should see the dollar rally across the board, and the dollar block should get beaten up, right? Thrashed to the downside. That's my ideal scenario. Fingers crossed it comes off. All right, guys, have a good one. Cheerio.